So how would a reduction in corporate taxes affect the stock market? Steve Liesman did some digging.
It would make sense that with all the talk and all the apparent momentum towards cutting corporate taxes, that the market would be pricing in at least some possibility of it actually happening. Corporate tax cuts will flow right to the bottom line of companies, especially the high tax companies. But CNBC looked at 3 different baskets of high tax stocks. The result, all 3 are substantially underperforming the broader market. S&P Global divided up into 3 different categories. The top 100 taxpayers, they've returned 4.8% year to date. The bottom 100 taxpayers returned 11%. And then you take out those companies that are paying no tax, they could be potentially troubled companies. They're up 24% year to date. Here's a basket of high-tax stocks from Strategas and its performance relative to the S&P 500. If it were 100, it would equal the broader market performance. Instead, it's been underperforming most of the year. Now, it popped last month when the tax outline was announced from the Big Six, but seems to have come off again with the spat between Senator Corker and President Trump. That potentially diminishes the chance of passing the tax cut package. 3 reasons have been offered for this divergence. First, the market may not be appropriately pricing in the chance of a tax cut. Second, it doesn't believe these tax cuts are good for the economy or earnings, since they could accelerate rate hikes. Third, the market just doesn't think the tax cuts will happen. Dan Clifton of Strategas thinks the market is underestimating the chance of passage and thinks there's money on the table for investors. Michael Thompson, president of S&P Global, points out the market is focused on growth stocks, many of which don't pay high taxes, so it hasn't really put a value on the high tax companies. The right answer, the market can sometimes be inefficient, especially when it comes to discounting political outcomes. For Nightly Business Report, I'm Steve Liesman.